Wall Street sees your revenue figure and sees that you need to move the needle on that. So you can concentrate on one store at a time, but how do you think about communicating to them, we can grow this massive operation, we can have the earnings growth that investors want to see?
Yeah, well, I think that comes from multiple dimensions, and they're probably fairly straightforward. We've got an opportunity in our comparable stores to drive sales, the stores that have been open for more than a year. And I could take you, Brian, or anybody to a store and we could walk through the categories and you can point to those opportunities where we can get better. And we're focused on doing that. And then there's this compelling growth story related to technology and e-commerce that's got higher percentage growth but a lower base. And the way we bring that together in the United States and around the world is the key. So one of the things that goes through my mind is the day-to-day core operations, the short-term aspect of improving, but then also making sure that we're building the capabilities that we need for longer-term growth.
You mentioned international. You were in the role of running international businesses for Walmart before you stepped into the CEO role. With that perspective, the markets you're in internationally, where can Walmart grow on a large scale that's going to help move the needle for the company overall?
Yeah, it was a great opportunity and advantage to spend those years traveling around the world learning about our businesses in all these markets. But looking forward, China presents a tremendous opportunity for the company.
Mm-hmm.
And it's probably fairly obvious how much upside there could be there. And building the foundation, the supply chain, the business model, the talent depth that we need so that we can match up to what's possible in China is certainly a priority for us.
Everyone recognizes the scale of the opportunity there, the large population, the urbanization trends, rising incomes, and yet growth is slowing there compared to where it's been for the last 10 or 15 years pretty dramatically. How much do you concern yourself with that? How much does that impact the way you're investing in China?
In China and elsewhere, we think long term. So the changes that the government's making to drive the economy through consumption and the work they're doing to create more of a social safety net and the fight against corruption and changes that they've made there have created a situation in recent times where growth has been a little bit slower than what they would have estimated it to be themselves a few years ago. But it still presents, not only in the long term but in the short term, a tremendous amount of upside for us if we open great stores, continue to grow the Sam's Club business, which is strong there. We own 51% of an e-commerce business in China. So we've got multiple opportunities to grow in the market.